Okay. Good afternoon, everybody. I will now call the North Carolina ABLE Program Board of Trustees meeting to order. I welcome everyone here to the meeting. Treasurer Falwell sends his greetings and his regrets because he had something on the calendar that he just couldn't miss today. My name is Chris Farr. I am the Chief of Staff of the Department of State Treasurer, and I'll be chairing the meeting today and voting in the Treasurer's stead. I'd like to open the meeting in honor of Able to Save Month and mention that Treasurer Falwell will be in Wilmington on Friday talking about able to save and North Carolina's ABLE. I'd like to extend a special thank you to one of our board members, Melinda Plew, who is coordinating this event in Wilmington with our staff. To learn more about Able to Save and see the additional resources that they have on that website, please go to ablenrc.org. As all of you know, Mary Bonfiglio has retired. I believe you probably heard from Jeff Hancock, our new director, at the last meeting, although he was not the director at that time, but we welcome him here today, and we're very, very glad to have you.
Thank you, Chris.
Just some housekeeping items. Just a reminder once again to keep your phones muted when you're not talking. There will be a public comment period for organizations and individuals to address the board later in the agenda. If you're attending the meeting via GoToMeeting, just sign up for public comments on the chat box. If you're attending the meeting in person, there should be a sign-up sheet here in the room. And if attending the meeting by phone, please speak up at the end of the meeting. Continuing with the Department of State Treasurer's initiative to increase government transparency, the department has established a policy to record audio and video of official public meetings like this one and make those recordings available on the department's website. This is an effort made to increase transparency and accessibility of public meetings that fall under the authority of DST. Today's meeting is being recorded under this initiative. I want to let you know about several requirements for our meeting to comply with the law on remote meetings. We will take roll call by name. If you must leave the meeting at any point, please announce your departure. And then when you return, please announce your return as well. These items must be recorded in the meeting minutes. And don't be afraid of being rude by just speaking up, because that's the way we need to do it. Likewise, please state your name before you speak. We will take all votes of the board by roll call. And finally, texts or other recorded communications between board members during the meeting, even on personal phones, are considered public records to the extent that they concern the meeting. I'd like to announce reappointment of board members Marquita Robertson and Melinda Plew to the North Carolina ABLE Board, and the appointment of Catherine Boskin. Am I pronouncing that right? Catherine Boskin?
You've got it.
Hi, Catherine. The appointment of Catherine Boskin as the interim commissioner of banks. And I just want to thank you for your service. And we know that this is a commitment of time and interest and effort, and we really appreciate your service to the state. So, Jeff, we'll have you take the roll.
Great. Chris Farr is chair.
Aye.
Catherine Boskin.
Present. Here.
Chris Egan. And Tim Smith.
Here.
Thank you.
So we do have quorum. Please take a moment to review the agenda. Hopefully you've got all of your materials in front of you. Does anyone present have an actual, potential, or the appearance of a conflict of interest in these matters? So the next item, in your package, you'll see resolutions for appreciation of service for Mr. Ben Wright and Commissioner Ray Grace, who is leaving our board. And I will entertain a motion to approve the resolution for appreciation of service for Ben Wright and Commissioner Ray Grace. And I do want to just thank them very, very much for their service. And we're sorry to see them go. And we want to welcome the folks that have taken their place. I will.
This is Katie Boskin. I'll be happy to make that motion.
Thank you. Is there a second?
Melinda, I'm happy to second.
Okay, board members by roll call. Chris,
Aye.
Catherine Boskin,
Aye.
Melinda Plew,
Aye.
Chris Egan, and Tim Smith.
Yes.
Okay, next I'll entertain a motion to approve the minutes from the May 12th, 2021 board meeting. Is there a motion?
So moved, Melinda.
And a second?
This is Katie Boskin. I'll second.
Thank you. Roll call.
Roll call, Chris Farr,
Aye.
Catherine Boskin,
Aye.
Melinda Plew,
Aye.
Chris Egan, and Tim Smith.
Yes.
Thank you. Motion passes. Jeff Hancock and Reed Chisholm, our legal counsel, will provide an update on the National Able Alliance Program Manager search.
Great. Thank you, Chris. So to provide an update on the National Able Alliance Program search, the current Able Alliance Program Manager is a census, and our contract with them expires on December the 6th of this year. The National Able Alliance, led by the state of Illinois, issued an RFP on December 1st of 2020. All bids, as well as best and final offers, were submitted to the state of Illinois. There was a small group from the multi-state consortium that formed an evaluation committee. North Carolina was a member of that committee, and Mary Juanfilio served in that role. As a result of that, the Alliance has made the decision to award the contract to a census on a preliminary basis. Currently, Illinois is negotiating with the census on the final terms and is targeting to have that completed by the end of the month. At the point in which that contract is finalized, then the rest of the member states will be issued their implementation agreements to be executed, and we expect to have that in front of the board at the November meeting for vote. That is my update.
Anything to add, Reed?
I don't have it.
Okay. Are there any questions for Jeff and Reed? Okay, then we'll move right along. Christy Fairley, our communications manager, will present the communication and marketing update.
Yes, I'm just going to share a brief communication update, and I really would like to start that with extending a warm welcome to Zora Falkowski. She is our new communications officer, and she'll be dedicating some of her time to NC Able and will be fully involved as we move forward with some digital marketing and make more awareness about the NC Able program. As the chair mentioned, it is Able to Save Month, and we are promoting awareness of NC Able throughout this entire month. We're very excited about the treasurer's visit to Wilmington on Friday, and I would also like to extend our thanks to Melinda for playing a key role in making all of this happen. Another board member I'd like to thank is Chris Egan. He will be presenting NC Able during a breakout session at the NCPCC in September. And we have 2 additional virtual events planned this fall that Jeff will be presenting. ncable.org, which is our kind of standalone website that we can use for marketing purposes, is live. It's getting good traction, and this quarter we're really going to use this to push some digital marketing initiatives. On the next page, you can see how people reach this new site and where they're located in North Carolina. And we've also had visits from other states. This will serve kind of as a baseline as we move forward so we can see how we're progressing. The chart below shows the nc.savewithable.com statistics, and that is the census hosted website. From Q1 to Q2, you can see a slight dip, but I see that as good news because I think people are getting information from ncable.org and moving over to nc.savewithable to actually register and open an account. And finally, I always like to share some happy social media pictures that are getting good traction. And so that is the social media that we have out right now. And that's all I have.
Thank you, Christy. For the board, are there any questions for Christy on communications or marketing? Okay, hearing none. Hillel Pritchard is on the line from a census, and he will present the administrative update.
Good afternoon, everyone. Can you hear me okay?
Yes.
Excellent, excellent. Well, good afternoon. I'm Khalil Pritchard. Thanks for the introduction. I'll be serving as the interim RM for the Alliance, and it's my pleasure to be here and have the opportunity to present our second quarter stats. I'm joined by Molly Peterson, who will also support the plan and will be the main point of contact here at the census for the North Carolina team. So I'll begin with providing a few business updates, followed by program updates and stats, and then we'll conclude with portfolio performance updates presented by Tom Lowe, who's the Vice President of Investments here at the census. So if you have any questions along the way, please don't hesitate to ask. I'd be happy to answer them. So kicking it off with an operational overview, and I wanted to give a brief update on the Stonehill Capital acquisition. I am pleased to announce that transition and transaction actually has closed on August 2nd. And just as background for the board, Stone Point Capital is a leading private equity firm that specializes in financial services that have entered into a definitive agreement to acquire a census from our now previous owners, Genstar Capital, Aquiline Capital Partners, and Atlas Matchment Capital. Stone Point fully supports our long-term strategic and client goals wholeheartedly, and they look forward to helping our business develop and expand. Now, as you may know, Census has had a variety of ownership structures over the years, but our commitment to our clients in the industry has been constant, and that will never change. So we'll continue to operate autonomously with no impact to our current management or teams. And again, we're very pleased that this transaction has reached the finish line, and we look forward to continuing to work on your behalf. From a business resiliency strategy, our offices are still open only for mailroom, scanning, and select technology functions. All associates continue to successfully work from home, and at this point, there's no plans to reopen any of our offices before September 1st. And with the new Delta variant, we may even go a little bit past that, but right now we're looking at September 1st as a reevaluation date. The senior leadership team is actively working on how to determine how and when to bring the associates back safely. And this will most likely include some type of hybrid work schedule for some associates, depending on role. So more to come as the year develops and that strategy gets ironed out. From a project perspective, there are really 4 main projects we're focused on as we look forward over the next 5 months. The first one, and probably the biggest lift for us, is going to be converting in the Mission Enable plan, which we're aiming to do at some point in Q4, most likely in December. Those meetings are underway, so we will keep the overall alliance up to date as that progresses. The next project we're focused on is a Fifth Third account feed update. Now, this is going to be an update to our nightly feed for enrollments, which is required by Fifth Third to ensure that they can properly support the information of if the enrollment is coming in via paper or via email. And that project is expected to launch and go live at the end of September. The third project is How Did You Hear enhancement. We're looking to add the Special Olympics to that question in the enrollment flow. And it looks like that's going to be done in the next couple weeks at the end of this month. So we'll be happy when that's up and running. And then the last item that we're going to try to close out the year with is going to be updating our enrollment flows as a result of the new regulations. And I'm sure, obviously Jeff and team, you guys are aware of that, but the enrollment flows are going to have to be updated slightly to be able to capture the new reg requirements of allowing a full hierarchy and self-certification. So we're continuing to have internal dialogue and conversations to figure out the best approach to build that out. I know states are still having conversations on what they're comfortable implementing. So we're going to have ongoing conversations, active participation from everyone. Thank you in advance for your feedback and input. And we'll keep you posted on our progress here at Census as we move forward. I'll stop there. Any questions from a overall business and operational update?
Board members, do you have any questions?
Nope.
All right. Thank you very much, Mr. Pritchard.
Excellent. Excellent. I still have, I can run through quickly here the program metrics just to give you an overview of where the plan is as of 6:30. So we can begin on slide 3. So overall, you'll see there's been a good amount of growth in the assets since the beginning of the year. As we take a look at this first slide, you'll find that the total dollars has risen from 10 million to a little over 13 million as of the end of June. So that represents an increase of about 25% since January, which is phenomenal. And the organic growth, the market activity, and most likely the stimulus checks that went out in April are some of the key factors behind that growth. And we'd also like to note that since Q2 of last year, the assets in the plan has risen about 76%, up from 7.4 million. So again, really good growth. Even throughout the pandemic, we still saw increases in the assets, and activity, plan activity hasn't changed much. So that was very promising for us as well. Moving on to slide 4, which shows us a breakdown of the current plan level assets broken down by investment option. The largest amount of plan dollars are within the checking option, followed by growth and the aggressive option. So it's always interesting to see, and this is pretty consistent to what I've seen in some other plans as well. The checking option is a really, really liked option. It's used widely. The flexibility, the ease of use as far as being able to, use it on a daily basis for your everyday transactions. That's really been the appeal and what we've seen across the board. So this is pretty consistent with some other plans as well. The next slide here, slide 5, dives a little bit deeper into the contributions by month. So we're looking at it, month-to-month basis starting at the beginning of the year. You'll see a 24% spike in contributions in April. And like I mentioned, that's most likely a result of the stimulus checks coming in from when they were issued back in April. So again, that's another stat that we've seen increase across the entire complex for plans. Moving on to slide 6. This slide shows us the most popular contribution methods being used for the plan so far. One-time contributions make up just over 46% of contribution transactions, followed by checks. So that's really interesting. The recurring contributions, we always love to see, set it and forget it, automatic contributions. That's really the best way. Electronic contributions, the EBTs, percentage of dollars there. Again, that shows us that people are really engaging with the plan electronically and on the website. Anytime we can reduce paper, that's good for pretty much any industry, right? So it's really promising to see that participants are on the website. They are doing these electronic bank transfers and utilizing all the technology that we have in place for them. Slide 7, we start getting into the new accounts and the
Khalil,
account metrics. Yes.
this is Katie Boskin. What is the rollover contribution on slide 6?
Rollover contributions would represent rollovers coming into the plan either from another ABLE plan or potentially even a 529 plan.
Okay, so some other qualified plan.
Correct.
Okay, thank you.
You're welcome. All right, picking back up on slide 7. So this slide again, new accounts so far for this year broken down by month. Total new accounts have grown by about 41% since this time last year. And quarterly account openings have remained about the same. So we're kind of seeing that consistency quarter over quarter with a nice spike in growth since the same time last year, which is great. Plans going in the right direction from an account growth standpoint. The next 2 slides just give us a breakdown, and I'll go over these pretty quick here, but it gives us a breakdown of accounts and averages by disability, eligibility, and custodian type within the plan, which is really interesting, especially as we discuss the new regs and how that's going to impact the plan and the approach we're going to take with it. So just on slide 8, the top disability description, developmental disorders, with the total asset account, total assets and the most average account size, really, a good amount above the rest of the disability descriptions. And this is something else that I've seen, again, across other plans as well, as far as the order of the asset allocation across the disability description type. Then slide 9, looking in at the eligibility and custodian type. And again, I think when we kind of dive into the custodian type and we start to figure out, who's opening these accounts and how they're going to be impacted once we change the structure, this slide really kind of gives us a good sense of where the plan is currently, right? So if you're looking at your open accounts, most of the participation is coming from the account owners themselves, right? Followed by an authorized individual, AI, or parent guardian. So that kind of gives us the lay of the land of how we're looking currently. And again, as we implement the new regs and the new enrollment flows, how they're going to be impacted as a result of our decisions there. Coming up on the last couple slides here, slide 10, looking at the account closures by month. You'll notice an increase in closures over the past few months. We think the largest driver behind these closures are the inactive accounts where the funding or the required legal documents have not been received. And if they're not received in good order within 60 days, that account is closed. So that's what we see as the biggest driver. But there are some other reason types that you'll see on the slide as well.
Khalil, if you have an account that is inactive prior to closing, is there any type of outreach to the potential account owner to see what may be the holdup or why they haven't fulfilled the documentation or funding requirement?
Of course, 30 days after the account is open and not funded, we do send out correspondence, giving the account owner the opportunity to contact us and, either give us an update or potentially send in the proper documentation or contribution at that time. So there is outreach before we just, close the account after 60 days.
Great, thank you.
You're welcome. And the final slide here, slide 11, that I'm going to cover is looking at the Alliance asset rankings. And this is as of the quarter end. You are still top 5, which is the same as last quarter and last year, no change, but you're standing strong right there, the top 5 from an Alliance perspective. So I would expect to see that continued growth. And that's just a result of everyone's hard work and dedication to the plan and to the plan participants. So if there aren't any questions for me, I can hand it over to Tom to run through our fund performance, but I do want to open it up to make sure there are no questions for me before we pass it along.
Khalil, this is Katie Boskin. I have what might be a new person question. Given the similarity in opening ranges and launch dates here, why is Pennsylvania at 30% of the assets in the alliance, and North Carolina's got the 6%? What is driving that disparity?
That's a good question. So Pennsylvania has a really big state appropriation for the product. They've allocated a lot of money for marketing and different things, right? So they have a really strong engine behind the product, and it just allowed their assets to grow at an exponential rate compared to everyone else in the alliance, if that makes sense.
It does. Thank you.
And Katie, to further answer that, if you were to look at slide 19, you can kind of see by states the amount of resources that they put towards their ABLE programs. So that may help kind of, explain the engine that Khalil mentioned.
Exactly. That was my next point.
Thank you for that. This is Katie Boskin again. I'm looking though, and it says the Minnesota and Illinois with their $0 appropriation, did that drop off at some point? Or have they just achieved significant success with no funding? And if that's true, then what did they do?
That's a good question. I can't speak to if they've ever had any appropriation set aside for the project, but this is basically how it stands now. Now that's a good question. I'd be happy to take back to see if I can get some more information on how they were able to grow so much without any money allocated, right? If they had some other things going on or what have you, that'll be important to figure out, so I can take that one back.
Thank you.
Katie, those are some great questions, and we appreciate you asking them. Christy Fairley, our communications manager, wanted to add to that.
Yeah, I know that some states, it's not a standalone program. It's actually wrapped in the 529 program. So those states have a dedicated call center dedicated to the 529 entity that also includes NC ABLE. So that may contribute to some of that growth as well.
Gotcha.
And this is Chris Farr again, and of course we're rather proud to be in the top 5 with the little resources that we do have in comparison. You can see the number of staff, which I think is especially striking, and we chalk it up to the engagement and participation of our board members, our communications team. And we know that we could do a lot more, but we're quite proud of what we have been able to accomplish.
And this is Katie Boskin, and I 100% agree. Looking at slide 19, we are knocking it out here in North Carolina with our less than 1 FTE dedicated to it. And so by no means am I casting aspersions on North Carolina's performance. I think it's incredible. It shows the dedication that we are in the 5th spot. I, however, am not above taking good ideas from other states who are seeing more traction with the program. And that was the genesis of my question.
Absolutely. Well, we appreciate your question. Any other questions?
Thank you for the question.
Okay, you can continue, Khalil.
Excellent, thank you. At this time, I'll pass it over to Tom Lowe, and he can run through the fund performance for the quarter.
Thanks, Khalil, and thanks everybody. I know you normally speak to my team member, Paul Supay. He's out this week, so I'm filling in for Paul. So thank you. Thank you for attending. I'd like to start with a brief market overview of Q2 and then talk about the portfolios in the North Carolina plan. So the markets had another strong quarter during Q2. The global economy was in a state of rolling recovery as the COVID-19 pandemic eased and central banks remained accommodating, meaning essentially cheap money. It's the longest stretch of positive quarterly U.S. performance since 2017. Year-to-date and one-year performance has also been strong, although the market leadership has shifted from the early stages, value stocks, growth stocks, depending on the quarter, small and large, for example. In addition to coming out of the pandemic, low interest rates have been a leading reason for the market rebound, as ultra-low rates motivate investors to move money away from low-yielding bank savings accounts into the stock market seeking better returns. Low rates also particularly help longer-term growth stocks. Certainly heard the stories, Amazon and Apple and Netflix, some of these large growth stocks are particularly helped by low interest rates. The flip side of this strong performance, potentially, is that if interest rates may rise too fast on inflationary pressures, this can slow growth and the market. There are signs of inflation. Today's print of 5.4 was relatively high versus history, although it was the same as last month, so it was thought to be sort of moderating a little bit. I'm not sure if one data point's enough to say that inflation's moderating, but today's print was 5.4. So the Fed Reserve has a bit of a conundrum, I think, but they recently began to give signs that a change may be coming, although the implementation remains many quarters out. Do they start to taper in 22 versus 2023? Question is whether they need to act sooner. And this is the balancing act. They taper too soon, maybe they snuff out growth. If they taper too late, inflation starts to take a bite out of everybody's paycheck. So I think the number one market issue right now, if you will, is inflation. Looking at the specific portfolios within the North Carolina plan, they all acted as expected. So the more aggressive options have more equity, both U.S. and international. And so the more aggressive options with more equity had stronger performance. So you move from the aggressive option for the quarter was at 6.84, and you see moderately aggressive has less equity and so on, moves down from the higher performance with more equity to the still good performance, but lower performance as we add fixed income into the mix. So the performance for the quarter was as expected, continued strong performance. These portfolios, as I'm sure Paul has reminded you over the years, over the quarters, are passively managed portfolios. So their goal is to equal the benchmark or thereabouts after expenses. And all the portfolios in this plan are doing their jobs. They're all in the ballpark within tracking error tolerances of their benchmarks. So the portfolios on a 1 month, a year to date, 1 year basis are all performing nicely and as designed. So you can move ahead, William. Unless there are questions on the overall portfolios. I'm sorry, let me stop there. Are there any questions on the overall portfolios? Very good. Thank you. Sorry.
Okay, you can proceed.
Very good. Thank you. So the overall portfolios are comprised of a collection of underlying portfolios in various allocation percents. So these are the underlying portfolios that are the ingredients, if you will, in the asset allocation portfolios. So, for example, this first fund is essentially the U.S. equity fund, which is generally the largest portion of equity in most of these portfolios, and especially the aggressive portfolios. So different allocations amongst the different funds. And to reiterate what I mentioned earlier, is you can see that these funds are tracking their benchmarks quite nicely, either on their benchmark or a couple basis points below their benchmarks. So all these underlying portfolios are performing as expected. And on this page, you can see the large cap U.S. at about 8.5 leading the way. The extended market, which is mid and small stocks within the U.S. at a still strong 7% for the quarter. The EFO, which is developed outside the US at 5.2, emerging markets at 5.07, and the REITs at 11.9. As we've come out of the pandemic, REITs are a real estate investment trust. So real estate has had a very strong rebound, if you will, from the pandemic. So all these are all considered equity, and they're all performing quite strongly during the quarter. The only note I would make is some of these indices, even though they track the benchmarks, some of the more volatile areas of the market, emerging markets, for example, can have some volatility versus the benchmark, having to do with cash flows coming in differently to the fund than they are in the benchmark, for example, fair value pricing. So in some of the longer dated time frames, you can see a little bit of variance from the benchmark, but this isn't a sign of weak or poor management, but simply a factor of the volatility of the asset class. Thanks, Khalil. And this last section is the fixed income underlying ingredients. And again, fixed income is going to perform less strongly generally than equities, but still a strong quarter with the first bond there, the total bond market returning 2%. So you see a decent 3-month performance, and you see a short-term fund a little less. You see the TIPS fund, which is performing, starting to perform better and will perform better as inflation ticks up, and then the international bonds. So bonds are doing as expected. Over the longer term, you see a couple of negatives there. During the first quarter, interest rates rose, and that hurt bond funds during the first quarter. But in the second quarter, they came back nicely, and over longer periods, they're doing their job. So fixed income funds are doing their jobs within the portfolios, and the funds are tracking their indices appropriately. So let me stop there and see if there are any questions on investment performance within the plan.
Any questions from the board? I guess not.
Very good, and thank you for your time. And if there are any follow-up questions, certainly funnel in through Khalil.
We appreciate the report.
Chris, before we go to the next section, Cheryl Walfall Flag had a question regarding, or a comment regarding the communications. Cheryl? Cheryl, we can't hear you.
On the website.
She is. We can see her. Cheryl, we are not able to hear you. Must be having some audio technical difficulties. Cheryl, we're going to move on, and we will circle back to you in case you get your audio fixed in the meantime. Sorry, Chris.
That's fine. The board members have any more questions for the gentleman from Ascensus? Okay. So has anyone, Patty, signed up for public comments in person or by phone or by chat?
No, just Cheryl just has a question.
Cheryl. And she came in through the chat. Cheryl, if you're still there, if you see the microphone, can you click on that to unmute it?
She was showing green, so it looked like she was unmuted and she was talking. But
Just a technical. We apologize, Cheryl, for not being able to hear your public comment. Is there an email address we can give to her so that she can, if she has any questions, she can write in?
It's the ncable@nctreasurer.com.
ncable@nctreasurer.com. And if you have a question, please email in and we'll do our best to answer that, Cheryl.
I would like to say just real quick that Cheryl had a great write-up with MSN Money, and that she's actually on this social media page because we shared that on our NC Able page. It was a wonderful write-up about her family, her story, and it was just really great. We shared that on social media, and it was had a really great response.
Well, thanks for letting us know. And I'm sorry that we can't hear from her. But we appreciate you joining the meeting. Okay. Does anybody on the board or on the staff have any comments before we end the meeting? Anything that you want to share or discuss? Well, hearing none, the date of the next meeting is November 10th, 2021 at 9:30. And I'll entertain a motion to adjourn.
So moved, Melinda.
Thank you, Melinda.
Seconded, Katie.
Thanks, Katie. And thank you so much for joining us today. The meeting is adjourned.
Thank you, everyone.
That's okay. Board members by roll call. Chris Farr,
Aye.
Catherine Boskin,
Aye.
Melinda Klug,
She made the motion.
Chris Egan, and Tim Smith.
Yes.
Meeting is adjourned. Thank you.
Thank you, everybody.